Problem 10. So we will begin with the schedules first and then transfer the items to the formats. So I think the name of the bank is India Bank Limited. India Bank Limited. And the date given to us is 31st March 2015. 31st March 2015. So let's go and start with the schedules. The first is Schedule 1. Schedule 1 is capital. So here we have authorized capital. And authorized capital is 50 lakh shares, 50 lakhs divided into 5 lakh shares of rupees 10 each. So 5 lakh shares of rupees 10 each. Now that comes to 50 lakhs. That comes to 50 lakhs. If I just write 50 lakhs here, but we are showing the figures in thousands, so these three zeros won't be there. Okay, so we write it as 5,000. Similarly, we have the issued, subscribed, called up, and paid up capital, which is given as, if you see the share capital, it is 2,50,000 shares of rupees 10 each. So this will become 2,500. 2,500. Next we have Schedule 2. Now let's see what we have. We have the statutory reserve. Now statutory reserve we cannot complete until and unless we complete our profit and loss account. So we just write the opening balance and keep. Statutory reserve, we have the opening balance, which is 7507. Okay, then we'll have the additions, which will get only once the profit and loss account is complete. You can say add additions or transfer. You can do that only later. Next we have the revenue reserve. The amount is 5,000. And we also have the balance in profit and loss account, which will be the last item, but this also we need to wait for the balance profit and loss account, balance in P and L account. So the balancing figure of your profit and loss account. Okay. Next we come to Schedule 3, which is Schedule 3 is deposits. So we have demand deposits, then we have saving bank deposits, and term deposits. So demand deposits are 11, 14, 30. Saving bank deposits are 1186.05 and term deposits are 1465.20. So that total comes to 3765.55. Next we have borrowings. I think we just have one item there. Yeah, borrowings from RBI. Borrowings from RBI, which is 2,900. Next is Schedule 5. Other liabilities and provisions. So the first thing here is just to put it in order, we have rebate on bills discounted, but that I'll put that towards the end. We have bills payable, which is 5474. Then we have interest accrued, which is 1256. We also have rebate on bills discounted, which is 3303. Now we are going to have another item which we do not know yet. If you remember, that is provision of taxation. Okay, they've told you in the adjustments, provision for income tax including surcharge is to be made at 35%. Now this is 35% of the profit. We don't know the profit yet, so we need to leave that blank. So I'll just write it and keep so that you have to fill it in later. Provision for taxation. Okay, so we can't do that total yet. We do it later. Coming to now Schedule 6, cash and balances with Reserve Bank of India. So we have here, we have cash in hand, which is 211414, and balances of Reserve Bank of India is divided in two parts. Balances with RBI, we have in current account and in other accounts. So in current account it is 77347, and the other accounts it is 985. Okay. So the total comes to, the total here comes to 8446. Next is Schedule 7, balances with banks and money at call and short notice. So that comes to balance with other banks in current accounts. That's the item. Which is 823, and we also have money at call and short notice with banks, which is 25. So the total of this comes to 848. Schedule 8 is investments. So here I think we have quite a number of investments. Yes, we have investments in government securities, which is 983.52. Then you have investment in other approved securities, which is 378.04. Then there's also investment in shares, which is 1260. We still have another one, investments in debentures and bonds. Which is 1517. So the total here is 138,933. Next, schedule 9. Advances. Now here we have to show a lot of information, not so much of calculation, more of information. So we'll show ours as the first part as usual. So the first thing that we have here is bills purchased and discounted. Which is 218.53. Then we have cash credits and overdrafts, which is 997.68. And then we have term loans, which amount is 70123. Okay. So the total of this comes to 191,744. Now, what they want is they have given us some information of this total, how much is to certain sectors, how much is secure, how much is unsecured. So that's what we are going to show next. The B part is, now you'll have to look at the adjustments. Advances amounting to rupees so and so are secured. Those amounting to so and so are covered by bank guarantees, while the remaining advances are unsecured. So out of this, the total they are telling is some are secured by tangible assets, some are secured by government guarantees, and the remaining are unsecured. So we're going to write it as secured by tangible assets. The amount is 16, 25, 21. Then we have secured by bank / government guarantees, which is 25012. And basically the third one is unsecured. Now they've not given us the unsecured amount, but we can easily find it. So how we are going to get the unsecured one? It's a total here. We write the same total here, and then these two minus from this, you will get the unsecured. Okay, so even if it's not written, the unsecured will be 4211. This is basically the balancing. Okay, I hope you've understood this. And we still have another bifurcation to show how much given for various sectors. So we have, read further in the adjustments, at priority sectors, priority sector to the priority sector. This is we see. Priority sector is 68221, 68221. Then there's another one which is given as public sector, which is 29276. Then we have banks, which is 2755. And now even if you total this, if you can total and check, this total doesn't come to this. So basically there's still another one. There's still another one that we need to take into account. Okay, and that we will call others. That we will call others. And that others comes to 91492. Again, it's the balancing. Just for you to know. Next is schedule 10. Schedule 10, which is fixed assets. Okay. So now we have the fixed asset, the amount given to us. How much is premises? Premises at cost, they told us on 31st March. Premises are 361. 361. You can write the whole thing at cost on 31st March 2011 is 361. And they've also given us the depreciation till date. We check the credit balances. Okay, so these are some those few exceptions where even though it's a credit balance, it's shown under the debit items, or it's minused actually. It's not shown, it's actually deducted. So effectively you're showing the credit effect. So less depreciation to date, which is 109. So 361 minus 109 comes to 252. 252. Similarly, we have the same thing for furniture. Or not furniture, what is it? depreciation on other fixed assets. Sorry. The amount in other fixed assets are other fixed assets on 31st at cost on 31st March 2011 are 1890 and depreciation to date on those is 970. 970. So that amount comes to 920. 920. So the total of the fixed assets is 117. Next is Schedule 11, other assets. So here we have items like interest accrued, which is 2560. Then there is inter office adjustments. This is the debit one, debit balance. So on the debit side, 1274. Then we also have tax paid in advance. Which is 4876. Then we also have non-banking assets acquired. Non-banking assets acquired are 500. And we also have another item called stock, stationery and stamps. I explained to you that this comes like a current asset because it's bought in bulk. Stationery and stamps, you also call it stock of stationery, which is 142. So the total of this is 935. So with that we have finished the schedules of the sorry, we still have another one not finished. We still have another one which is contingent liability, schedule 12. This will check the adjustments for this. First thing is claims not acknowledged as debts. Claims against the bank not acknowledged as debts, which is 12. Now they've said 12,000, but we cancel the 3 zeros. Okay. Then we also have the bank has given guarantees in India on behalf of constituents. Which is 170 to 1. The last one is acceptances, endorsements. Acceptances and endorsements, which is 20145. So So the total here comes to 37178. This is the total. Now we move on to schedules in the profit and loss. Schedule Schedule 13, which is interest earned. So which are the items here? We have three items here: interest slash discount on advances slash bills, which is 31143. So have another two items: income on investments, 14362, and interest on balances with RBI and other interbank funds. Comes to 3447. So the total of this comes to 48952. Next is schedule 14, which is other income. What do we have here? Commission, exchange and brokerage, which is 4752. Then we have profit on sale of investments, profit on sale of investments, which is 175. And in the debit balances, we have a loss on sale of investments. Though we don't have a profit on, in the debit balances, we have a loss on revaluation of investment. Though we don't have a profit on revaluation of investments, we have to show that as a negative figure. So loss on revaluation of investments is 215. Since it's a loss, I'm going to put it in brackets. So the final amount here is 4712. Okay, so basically why I put this as why I've taken it here, if you remember the format, this also comes here. Normally the losses are minus from the profits, but we don't have a profit on revaluation of investments. So we show the loss is a negative. Schedule 15 is interest expended which is I think there are two items here. Look at the debit balances now. Interest paid on deposits, interest paid on deposits, which is 22803, 22803, and we also have interest on RBI borrowings, which is 445. So the total here is 23248. We come to the last one now. Schedule 16. Operating expenses. So the first thing here, now we need to mention all those payments to and provision for employees. One 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 82. Next is directors' fees and allowances. Which is 348. Then there is auditors' fees. 1688. Rent, taxes and lighting. 695. Printing and stationery. 186. Advertisement and publicity. 40. Then we also have depreciation on bank's property, which is 271. Repairs 116. Insurance 1 2 3. Insurance is 935. Then we have law charges, which is 17. Postage 223. And other expenses 715. The total of this comes to 16416. With that we finish up schedules. Now we will go and transfer the items to the balance sheet and the profit and loss account. Most of our schedules are complete except reserves and surplus. Yes, I think that's only one. Because we need to know the profit. And yeah, schedule 5 where we have to transfer the provision for taxation. Capital and liabilities. Under that you have capital, reserves and surplus, deposits, borrowings, other liabilities and provisions. This is 1, 2, 3, 4, 5. We know some of these. We'll write the ones that we know. We know capital, which is 25. Reserves and surplus we don't know yet. Then we know deposits 3,76555. We also know borrowings, which is 29,900. Other liabilities and provisions, we don't know this yet. Okay, so we need to wait till we get a provision for taxation. Coming to the assets, cash and balances with Reserve Bank of India, balances with banks and money at call and short notice, investments, advances, fixed assets, other assets. This is 6, 7, 8, 9, 10, 11. 6 is, the amount is 8446. Then we have 848, 138, 933, 191, 744, 1172 and 9352. We don't total it yet because we don't know the total of the other part. Then we also have contingent liabilities, total of which is 370 178. And there are also bills for collection mentioned to us, that is on 31st March the bank held bills amounting, the last adjustment amounting to rupees 9847. These don't form part of the total. Now we move on to the profit and loss. Income. So under that we have interest earned and other income. Interest earned is 13, another income is 14. I think we already know our interest earned, which is 2000. Interest earned is 489.52. Other income 4712. So the total of this is 53664. Next is expenditure. Interest expended, operating expenses, provisions and contingencies. So interest expended is here 15, 16. We don't have a schedule for provisions and contingencies. So 15 is 23248 and 16416. Now we have one item that comes under provisions and contingencies, that's provision for taxation, and that we need to calculate based on our profit. We don't know our profit yet, so we will do that working note. Normally we would have two items here, provision for bad debts and provision for taxation. In the problem we don't have any provision for bad debts. Okay. calculation of provision for taxation. So our total income is equal to, let's see, our total is 53,664. Our total income is 53,664 less expenditure is those two items put together, which comes to, that is, which are the two items, 23248 plus 16416. If you put that together, you will get 39,664. 39,664. So basically, this is your profit on which you have to calculate your tax. So we normally call it profit before tax. That comes to how much? 14,000. So on this, we are going to calculate a provision for taxation. So therefore, provision for tax is equal to 14,000 into, I think it's 35%, yes, into 35%, which is equal to 4,009. So we will just transfer this there, 4,900. So with this, we also complete another schedule. So let's complete that schedule as well. Provision for taxation, always two effects, 4,900. So the total of this is 14,933. So we know this 14,933. Need to transfer that to our balance sheet. 14,933. Let's complete our profit and loss account now. So this total comes to 44,564. 44,564. Move on to the third part, profit slash loss. So net profit for the year is 1 minus 2, which is 53,664 minus 44,564, which is 9,100. And we also have profit brought forward. They've given it to us as they've said profit and loss account, which is last year's balance. Profit and loss account, or we'll call it profit brought forward actually. How much is that? 3,500. So the total here comes to 12,600. Okay. Then we move on to our appropriations. Last part. First is mandatory transfer to statutory reserve, which is going to be 20% of the current year's profit, which never take this total, which is 9,100, and that is going to give 20% of that will be 1820. 1820. I don't think we have anything else. Okay, and then we have the total 12,600 call this balance carried over to balance sheet. So 12,600 minus 1820 is 1078. We still need to transfer these items. So the appropriation is here, it's 1820, the addition 1820, and that total is going to be 7507 plus 1820 is 939,327, and balance in the profit and loss account is this, what we have already got, 10780. So the total there is 25,607. Let's transfer this to the balance sheet and then tally the balance sheet. 25,607. So the total of the balance sheet is 422,495. 422,495.